Greetings, I'm Andrew Ludwig, and welcome to Black Onyx Alternative Investments, where we bring you face-to-face with South Africa's most talented boutique asset managers and industry stakeholders. Why do we do this? Because we believe that you, the investor, deserve to be better informed so as to achieve the best risk-adjusted returns. I would like to introduce you to Mark Preston, who is the Chief Operating Officer for Laurium Capital. Mark, thank you very much for joining us today. Please share a bit about your background and how you got into the alternatives industry.
It all started for me back when I was doing my articles with Deloitte. Towards the end of my articles, I was afforded the opportunity to travel with them to Bermuda, where I got my first practical taste of alternative investments for the first time. And I guess that, coupled with the fact that I had done a thesis in my finance honours at UCT in hedge funds, probably led to the start of my passion for the industry. No sooner did I arrive back on the shores of South Africa that I started searching for a role in alternative investments, but probably more specifically hedge funds. And so I ended up at Laurium Capital as Laurium Capital's Chief Operating Officer. I have been in the seat for the past 7 years now, and look forward to the next 7.
Could you describe the regulatory environment of the alternatives?
Yeah, Andrew, very interesting question, and no doubt a very topical one, and has been for certainly the last couple of years in the hedge fund industry, leading up to this regulatory environment that we find ourselves in. I think it must be said that the hedge fund industry has come from what I call a bit of a self-regulated environment pre the regulation coming in. I think it's always been a fairly robust industry. I think it's been an industry that's been led by top quality portfolio managers with robust risk management guidelines in place, mandates in place between you and the investor, a lot of transparency in that regard as well. But I think what the regulation has done is it's probably only added to that. I think the fact that there has been the introduction of a ManCo, which adds oversight to what the underlying managers are doing, provides some more compliance reporting and transparency to your investors, and of course the fact that you've got the Financial Services Board presiding over the industry now, I think should provide investors a lot more comfort than we found ourselves in a couple of years ago. Previously hedge fund managers were using Category 2 and 2A licenses under phase to run product. While the products themselves were not regulated, the managers were in fact very regulated. So I think that's probably where the natural self-regulation came from in the beginning. But I think we can look forward to some good things in the hedge fund industry going forward. I think we can look forward to some positive flows. Clearly, there are some structural inefficiencies from an access point of view that need to improve and get better, and I think that will happen over time. But I think we're in a good place.
Mark, how can investors access your funds?
Investors can access our fund one of a number of different ways. Traditionally, you found investors accessing your funds through, individual investors for that matter, accessing your funds through endowment products issued by insurance companies, long-term insurance companies, but also through structured products issued by banks, for example. In both these products, they provide fairly tax-efficient ways of investing in hedge funds, but also allow the investor to trade between hedge funds without necessarily incurring any tax penalties or tax issues. But I think now for the first time that we are in the CISCA landscape and that we are a unit trust, effectively hedge fund investors can access our hedge funds directly. Investors should always be careful when investing in a hedge fund from a tax perspective. People must always assess what the tax issues are between all of the ways that you can invest in a hedge fund. I think what you found over time is investors have generally been quite comfortable with endowments, certainly with all the tax efficiencies that they offer. But again, there are a number of other ways that that hedge funds can be accessed. But I think probably the most important way that hedge funds will be accessed going forward is through the LISPs. Certainly when we speak to the IFAs, the DFMs, and so forth. I think we're almost there. We have had discussions with a lot of the LISPs, and I think if they're not there yet, they're about to get there, certainly within the next couple of months. From a single manager hedge fund point of view, I think a couple of things need to happen and change from the way hedge funds are priced in order for LISPs to be able to accommodate them. But again, I think we're almost there. And so for the first time, IFAs, DFMs and so forth can access us through the LISPs. I think it must be said that I alluded to earlier the fact that there were one or two structural inefficiencies that probably needed to change to open up the gates to access a little bit wider. One of those is the fact that currently a collective investment scheme in securities cannot access a collective investment scheme in hedge funds. I know this is on the table at the Financial Services Board as we speak. And I think once the doors are open to that, I think we'll probably see a lot more flows coming into the industry. It's an important change that needs to happen and will happen. It's just a matter of when. But I think once that happens and once we do appear on the LISPs, I think that hedge funds can look forward to more flows.
Thank you very much for joining us, Mark.
Thanks, Andrew.
And thank you for tuning in to Black Onyx. For more details, please visit our website.